Well, traders, I'm pretty excited. This video will go a long way in determining, when it's all said and done, which group of people will I end up upsetting more, the Japanese candlestick crowd or the Fibonacci crowd? Let's find out. So after over 100 videos, we have barely talked about Japanese candlesticks. And I'll go ahead and just say this now. If there are any of you out there who are brand new Forex traders and looking for a video to help you learn how to trade with Japanese candlesticks, you are at the wrong video. You might as well go ahead and hit the back button now. But good news is every other video about Japanese candlesticks is there for that purpose, to tell you how great they are and to show you how to use them. Forex video creators all over the world know that if they put out a video showing you how easy it is to trade with a very simple candlestick or candlestick pattern, they can get a lot of views because people are very interested. This is a really popular topic, and they're not hard to use at all compared to a lot of tools out there. And so for that reason, that explains their popularity. But as many of my subscribers know, as soon as you hear the word popular attached to a Forex tool, what does that typically mean? It means you and I need to have a talk about this. So in this video, we're going to do a quick intro. Let me just go ahead and clarify things again by saying this has nothing to do with you putting up a candlestick chart or a bar chart or a line chart, anything like that, up on your screen. This is the art, I guess, of using 1, 2, or 3 Japanese candlesticks in combination to determine where price is going to go next. That's what this is all about. And I'm going to do a really quick introduction. We're actually going to do something we never do here and go over a bit of the history behind this. Now, the history is typically completely irrelevant to us in the end. We just want to know how to win. You know, history and who created it and all that nonsense, that's not what we care about. But I think the history can actually tie in to my main point. And my main point is that these things are just completely irrelevant for Forex trading. They can't help you. They can't hurt you. They're just one big ball of nothing. And so many Forex traders get stuck using these things when there are so many other better options out there, but they're never going to find out what these things are because they're so stuck in Japanese candlestick land. And we're going to go over the reasons why I think this is. And this is really important, traders. If any of you out there are stuck in this trap or just don't realize that you are, there's not going to be any other material out there talking about this. So we need to kind of dig into the reasons why people get lured into this trap and refuse to leave, because there are a lot of you out there right now who are there and you're super happy about it and you don't want to leave. There are plenty of naysayers out there that are going to watch this video, and no matter what I say, they're not going to change their mind, and that's fine. But I will address you all towards the end. I have something to say specifically to the people who are fully entrenched in the Japanese candlestick camp and are just waiting to sit here and argue with me. And look, that's fine. This is the role that I chose to take on. When there are no other videos or websites or anything out there telling you not to use tools like this or support and resistance lines and things that everybody really likes, pretty much all of the negative energy and all the smoke is going to come one way, and that's over here. And so I'm used to it. But I've also learned that most of these arguments are pretty similar to each other, and so I want to get ahead of this a little bit, and I want to extend a bit of an olive branch. Not really, kind of. You'll just have to see. But naysayers, stick around for that. So, moving on. The only other time I think you really heard me mention Japanese candlesticks at all was in the Dirty Dozen video. This is one of my most popular videos. Feel free to go check that out. But I talked about 12 Forex trading tools that you should never, ever use. Now, the interesting part about that is whether you agreed or disagreed with me about these tools, a lot of people all of a sudden thought they were a genius and just said, okay, well, you know, if these tools are so bad, I'll just use them, but I'll take the opposite side of the trade that I was going to go with. Price can only go up or down. So if one of these horrible tools tells me that price is going down, well, I'm just going to go long, and I'm going to be rich. But therein lies the problem, is that the tools I mentioned in the Dirty Dozen video are so unhelpful that you can't even do that. These things pretty much work at about as close to a 50-50 win-loss rate as you're ever going to find. So unfortunately, simply fading them is not the answer. It'd be great if it was, but just unfortunately, it's not. There is rarely ever a tool that you're going to find that works so poorly that just by simply doing the opposite, you're going to achieve good results. They do exist. I spoke about one a few weeks ago. If you want to go check out that video, I did find a way to use that for the opposite reasons it was intended to be used and achieve pretty good results under certain circumstances. So mark that one down if you haven't seen it before. That's something you're going to want to watch. But the main objective of the Dirty Dozen video is to highlight tools that don't necessarily just work really poorly, but just flat out don't work at all. And Japanese candlesticks fall into that category. So like I said, I don't care what type of chart you have up on your screen. We're talking about using things like this. Now when I blew up this picture, it became very hard to read. But you guys recognize most of these. You got your dojis up here that are more your single candle indicators, and then like a 3-candle pattern like a morning star, which would indicate bullish movement. So you have reversal patterns, you have continuation patterns, you got a little bit of everything on here. And this is really easy for traders because these are not hard to figure out. Once you are able to learn about them and see them enough times, chances are you're not going to miss them when they come up. And that's good for traders because that does take quite a bit of guesswork out of the equation. And we talked about guesswork before. Support and resistance lines and Fibonacci and things like that have a lot of guesswork attached. Which line am I supposed to use? Am I supposed to play price to bounce off of it or break through it? You know, a lot of unanswered questions go along with tools like that, but with Japanese candlesticks, it's pretty obvious what they're telling you to do. And that is one of the reasons that I think that their appeal is so high. But as I said before, the problem is they're just not correct often enough. So let's dig into the history a little bit. And then I'll tell you the reason why I think this is. So these were pretty much invented to help determine the future price of rice in Japan in the late 1800s. So the way it goes is it was credited to a man named Munehisa Homa, and he was a rice trader. And so it's to your benefit to find out if the price of rice is going to be cheaper or more expensive tomorrow. That's going to determine a lot in what you do today. So he created this system, so we think it might have come later by somebody else, but it doesn't really matter. A guy named Steve Nyssen wrote a book about it, and he's the one that pretty much took this technique and brought it over to what was at the time modern-day investing. And at the time, modern-day investing was stock trading. Remember, spot forex, the market we trade as we know it, did not come around until 1996. So the main things people traded for a very, very long time were things like stocks and commodities. Now, here's the thing about that. Things like stocks and commodities, the prices of which and whether they go up or down, are based on supply and demand, just like rice was. Back in late 1800s Japan, if a bunch more people were wanting rice but there was only so much to go around, or weather was bad and there was less to go around, well, that price is going to go up because of that. And then vice versa. That's how supply and demand works in everything. Now, I am not a stock trader. I am hoping to get into that down the road, but I'm sure it probably had a place in stock trading. Maybe it works really well over there. I don't know. But what I do know is it doesn't work in forex trading because forex trading is not based on supply and demand. Demand is there, but supply is irrelevant. All right? For us spot forex traders, if we want United States dollars, if we want British pounds, if we want Kiwi dollars, they will always be there for us to have if we want them. They aren't going to run out. Supply is not really a thing in our market. If it was, then great. Things would move very similar to stocks and commodities and rice back in the day. But it doesn't. The way our market moves is not based on things like this. So the tools you use for things like this just don't apply to our market. Fans of this channel, you know what moves price up and down, correct? For those of you who don't, it's the big banks. Now, this is my most popular video on my entire channel. You can go watch this one as well if you want. And there are many reasons why I think this is my most popular video by far, but I think one of the biggest takeaways was how people really did think that certain shapes or candlestick patterns or horizontal lines on a screen were the things that were actually responsible for price going up and down. And after they watched this video, they got their answer. You have very large banks and institutions that pretty much have free reign, and they also have the resources to take price wherever they want. Now, what motivates them to take price up and down is where us retail traders are sitting. If the majority of retail traders are going one way, these banks will simply take the price of that particular currency down until retail traders give up, reverse course, and then the big banks will do the same. Now, this seemed a little hard to believe at first until I pulled out the tools that pretty much proved my case at the end, and then that was the real jaw-dropping aha moment for most traders. But it turned out to be a really good thing, because once you learn what actually moves price up and down, you no longer sit there and have this mindset that certain breaks and rebounds off of lines on your screen are the things that caused the movement one way or another. So if, for example, you ran into a hammer or a hanging man, which no matter when you see these things or where you see these things, they both indicate reversals are imminent. So if you see these things and price actually did go the other way, you would be inclined to think that the hammer was the reason why, when the real reasoning the whole time was whether price actually did reverse or didn't reverse and just kept going. The hammer or the hanging man or the morning star or any of those things had nothing to do with it. But so many of you, over time, and this isn't really your fault, this is just because of what's out there. I don't blame you guys for thinking this way. But so many of you got so indoctrinated with these things, and all these people did was show you all these instances where these tools worked amazingly, because it's in their best interest to do that, that you completely drank the Kool-Aid. And you only trained your eyes to look for instances where this was successful. And you conveniently ignored the times where it didn't work at all. And even if that's not true, even if you were objective enough to see the times where they won and when they lost, you were probably a lot more supportive of the wins and more dismissive of the losses. Because at the end of the day, we just want to believe. I mean, how great would it be if these things actually did what they were supposed to do way more often than they didn't? That'd be awesome. So we believed. And we didn't really test these out the way we're supposed to. Instead, we just kind of hoped that they would carry us through to the end. And when it was all said and done, they didn't do that. If you guys all became millionaires or professional Forex traders by using Japanese candlesticks, you probably would not be here right now. Chances are these things have yet to pan out the way you want them to. And the reason why is because things like belief and hope are not an actual strategy. And to form an actual strategy, you need real numbers and real evidence behind what you are putting together. All right? So I propose this to you. All right, this is going to take a little bit of work, but as people who subscribe to this channel can attest, it's not an overwhelming amount of work, and the results you get in return for just a moderate amount of work are absolutely life-changing at best, and a marked improvement probably at the very worst. Hoping and believing gets you nowhere. Putting in the work and finding out if these things actually do what they say they're going to do is the only way to know for sure. So, for example, take any random time frame, random currency pair out there, put it up on your screen, and say, let's just say for the pound dollar, I'm going to go to the daily chart, and I'm going to take a 1-year sample size. All right. Then take the hammers and the hanging men, because they're really easy to see. They're a lot easier to determine than maybe a 2 or 3 candle pattern would be. So since they're so easy and people think they work so well, count them and off to the side on a spreadsheet or a piece of paper. If you have a money management strategy in place, and I hope you do. If you don't, man, it doesn't matter what you do. And if you need one, I have a video on that. I will link that below. But have that ready, and then enter a trade every single time a hammer or hanging man or gravestone, they're all kind of in that same family. Every time one of those things presents itself, and see how many times it would have made you pips, and see how many times it would not have. And then once you have done that, you're not done. Don't get too married to the idea of the results you just got, because you're going to have to do this more often. You do not have a good sample size in front of you at all. You need to keep doing this in different places. How many times? I don't know, maybe 10, 15 times. I mean, I can tell you this right now. The reason why we're not going to my charts right now is because on most of these charts, you're not going to get a whole lot of examples. These things don't pop up a whole lot, which is kind of good, because it's not going to take you a very long time to do this little experiment. But you're going to find out one of two things. Either I am wrong and these things work amazingly and you need to go all in on things like hammers and hanging men. And if that's the case, hey, great. I'm glad I was of help here. I just want everybody to win. I mean, I have my own opinions on which path to take, for sure. But if I helped you get there in the opposite way I intended, at least I helped you get there. I'm happy to help. Or you're going to find out that everything you thought you knew about these things, once you actually put pen to paper and really started to test these things out, was completely wrong. And the odds are heavily in favor of that happening. I mean, if you're completely objective here. But when this is all said and done, this is a huge accomplishment for you, because you just did and you just finished doing something that almost nobody ever bothers to do. What people almost always do, because people are lazy and they just want to hope and they just want to believe and they think that's a good way to go, is, like I just said before, they only pay attention to the times they win, because they're so easy to see. I mean, these hammers, for example, come at usually swing highs and swing lows, and those are super easy to see. So we get all excited. And then if they happen right in the middle of a trend and they don't work, those are not the easiest things to see. And if we do happen to see them, then we just kind of, explain it away, or we don't count it as an actual loss. We don't do this the right way. We don't throw any real objectivity at this. But there is a reason why this happened in the first place. And even though I have touched on all these pretty much already in this video, we need to go over them again, because I think we can all admit at least one of these things, if not more, have happened to us in the past. So first off, there is worldwide support for these things. Honestly, I got to be the first person up here telling you not to use them. If there's other videos and websites out there, that's fine. I figure there has to be at least one or two, but I do my research on these things before I make these videos. I did not find one. So we can pretty much say with confidence that all you have heard, all of the inputs going into your ears and your brain, was nothing but overwhelming support for these patterns. So why wouldn't you use them? Why would you ever decide to rally against them, even if they're not working out well for you? The whole world, all these people with videos and Twitter feeds and stuff like that have a bunch of followers. They got to know what they're talking about, right? And if this is just what we see over and over again, you can't expect us to think otherwise. I get it. But for some reason, people just don't do the math here. They don't run those little tests I just showed you how to do. And they also don't make the connection that I've talked about in the past. How, if there's maybe one or two other videos out there denouncing Japanese candlesticks, that's fine. But at the end of the day, the amount of videos supporting them compared to the ones that don't support them have got to be 99% or far more, like closer to 100% than 99. And you got to be really careful when you see something like that, because the other stat that is probably very close to 99.5, 99 something, higher than that, most likely percentage-wise, are the amount of spot Forex traders that never get to where they want to be. If you take the Forex traders that have really achieved their goals of becoming a professional or are trading somebody else's money in some other capacity, or doing really well selling signals, or working for a hedge fund, or have saved enough to supplement their retirement, whatever your initial goal was, everybody has one when they first start trading this market. And if you take all of the people who have fulfilled that goal, all right, I would be willing to bet really good money that those select few people make up a fraction of 1% of the entire amount of spot Forex traders in the world right now. So when you hear me refer to the 99%, that's what I'm referring to. All right? So we have over 99% of the people on any kind of social media or websites supporting Japanese candlesticks. And then you also have over 99% of people that don't get to where they want to be in their Forex trading. And nobody ever seems to draw any parallels between those two. Wouldn't it be a lot wiser to say, hey, I don't want to do any of the things these people do. I don't want to support any of the things these people support. Because in doing so, my chances go way up. But somehow people just don't put two and two together here. All right. So those are the two main reasons, I think. And then the other two reasons we already talked about is how easy these little patterns and candlesticks are to spot. And because of that, the wins, just by nature of how they operate, are very easy to see. And the losses are not so easy to see. And a lot of times, if we're able to see them, we just don't want to. So if you have traded Japanese candlesticks and have not gotten the results that you wanted with them, these four reasons, one of them probably applies to you, and there just hasn't been anybody around to really form a semi-logical argument as to why these things underperform. But now that we have gone over all of those things, I hope it resonates with you. I hope it inspires you to make improvements on your trading right now, whatever those improvements are. But above anything, really, I hope it inspires you to actually take what you are using and objectively test them out. Because I can tell you almost for a fact that the naysayers don't. And if for some reason they haven't done enough. Now, I normally give this guy a voice, and it's normally a voice in a very mocking tone, but I'm going to forego that this time. But the arguments that I know are coming is how there are these patterns that I haven't talked about, I haven't mentioned, and they're actually really, really good. And this video sucks because I didn't mention the one that they like. And my response to that always is, okay, I could go over the one you like. I could go over all of them in existence and test them out on my charts. But this video would take a month, and I don't know if YouTube even allows that. So we're going to keep things simple. But on top of that, I get the argument saying, well, you can't just use them on their own, VP. You got to combine them with support and resistance lines, or with Fibonacci, or with the RSI. And then that's where you get the really good results. And then sometimes I'll see on my comment section, well, I have really good results with hammers. And then they'll just put a period at the end of that sentence. Okay, let's talk about this. So all the naysayers out there, let me tell you what most traders do, including probably yourselves. If this strikes a nerve, it's because it's supposed to. We're going to try our best to improve on what we have, okay? Just remember that. I think most people, the way it all began was they just fall for what they see on websites and Forex Twitter because these people know more than you do, or at least when you were starting out they did, right? And they have a bunch of followers, and they didn't get those followers by mistake. They must be doing something right. They must know what actually works. I'm going to listen to them, take the tools they recommend, and go run with it. And so that's how it starts. And then later you learn that by combining these tools, you can get better results. And this is actually correct. You will get better results combining 3 tools that don't work very well than you will just using one of them on its own. This is the case pretty much all across the board if you know what you're doing. But I'm going to offer an alternative in the next slide. I don't want to get too ahead of myself, but I love it when people think they struck gold just because they combine Japanese candlesticks with support and resistance with the RSI, as if there was no possible better route to take. But we'll talk about that. And then what happens so often, because nobody wants to actually put in the work, nobody wants to know for sure how these things actually work because they're so high on hoping and believing that they don't want to put in the work to see the real results. You need to backtest, traders. If you have something you're considering using or something you're using right now and it's never been fully tested, like meticulously with an actual structure and a process, I have old podcast episodes that and blogs that explain how to do this. I actually will put those down below in the description. There's one on how to do it with just one tool, and I have another that shows you how to do it with an entire system that you're trading. But until you've done that, and then you've actually forward tested it as well, that's another podcast episode, but until you've done those things, you don't actually know what you have. You don't have real hardcore evidence in front of you. You might have your own account in front of you that can tell you something, but you don't know if those wins and losses are due to the entry system you put together, whether those things are due to money management or just overall bad trade psychology or the news keeps getting in your way. If you don't learn to put real numbers and evidence behind these things, you're going to have no idea, A, where the problem is, and B, what are the major areas you can improve. And if you don't know these things, how can you ever expect to get better? This is how people go from break-even or losing traders to profitable traders over time. You have to take an intelligent approach that involves some work behind it. It's the only way to get there. That's why I laugh. I'm going to have people I know that come in and say, hey, you're full of it, VP. I'm making 80% return this year just by trading dojis. And I'm going to know in the back of my head that that guy is completely screwed going forward because, one, he'll never repeat that. Because the only reason he's even there is because of completely reckless money management. And 2, it's also probably has nothing to do with the dojis. But these are the types of arguments I get when I do videos like this, and these are the main reasons why. And I want to offer solutions to these problems. And the last 2, I think we've already talked about. Yeah, you get too attached to the wins and overlook the losses. I say this because we've all done it. I think we're all guilty of this. So I'm gonna keep repeating it just because we need to learn to not do this. This is absolute death. This is trading on hope and belief are not strategies. As a result, most traders, especially my naysayers, never get where they want to be. If only we could put our differences aside and you could start watching my videos in the proper order. I'm going to put the beginner's video down in the description as well, whether you're a beginner or not. That's the video you want to start with if you want a good roadmap. I am happy to help you out in any way because I have helped many. If you go and look in the comments section of the majority of my videos, and if you look at a lot of the tweets I get, you will see people who say that, VP, your channel has completely reversed my trading for the better. I wasn't profitable before. I was break even. I've been doing this 5, 10, 20 years. Never quite got to where I wanted to until your channel came around. And this is the best compliment I can ever get. It's amazing what this channel can do for you. I look at my competition's comments, and there's a lot of really good positive comments, but they normally say things like, hey, you explained that really well. Hey, great video. Hey, good description. But I don't often see any place saying that, hey, your channel was responsible for turning my trading around. And this channel has really only been around for about 1.5 years. So we are getting, unless everybody's just completely lying to me, which I doubt, we are getting results here right away. So you probably want to do what the no-nonsense Forex traders are doing, and here's what they do instead. They find something they want to test, whether it's a price action tool, an indicator, whatever it is, and they backtest it properly. We've talked about that, and I have all the material you'll ever need in terms of how to do that properly and as efficiently as I can possibly think of. Then, after they've done that, and they find something good, they don't just stop. They keep going. They measure it against other tools. You can't sit there and say that this indicator or this tool is the best around if you haven't even bothered to measure it against other tools. Anybody that comes on my channel and says things like Japanese candlesticks are the best way to go, or support and resistance lines and the RSI are the only things you'll ever need to make money in this market, these people are unintelligent, lazy people. Do you know how I know this? Because they're either doing one of two things. They are either just parroting what somebody else said that they respect, or they're getting decent result with these tools early on, and they never ever bothered to A, measure it the right way, B, measure it against literally anything else. Forex trading takes a lot of initiative and learning and work, and it just amazes me that there are so many traders out there that just don't take it a step further. Out of the tens of thousands of tools and indicators that are out there, they find one or two and then they just stop. What the hell's that? Whether you love me or hate me, you owe it to yourself to find the best technical tools out there to help you make the most money possible. Why on earth would you do anything short of that? Because once you have put in the time, and so a lot of my followers were hesitant to do this at first, but they went ahead and did it. And something really great happens when you finally do discover those really great tools. You can actually put those tools together instead of putting shitty tools together, and the results can be nothing short of extraordinary. If a combination of Japanese candlesticks, the RSI, and Fibonacci is working really well for you right now, just imagine what you could do if you found a few tools that all absolutely outperform what you're using right now, and then put those tools together. They're out there. They exist. I'm not going to tell you exactly what they are, but my traders found them, and it didn't take them that long to do it. And I'm going to also link a video down below called Trend Indicators to show you, we'll make the process easier. I'll be like, look, this is pretty much what you're looking for. You can dismiss everything else, and in doing so, your search is going to go a lot faster. So are you searching for needles in a haystack here? Yes. Do I do everything I can to make this process go a lot smoother and make the haystack smaller and the needle bigger? Yes. But until you have actually done this, you cannot sit there and say that your way is the best way. And I guarantee you, none of you naysayers have done this. But again, put your ego down and understand that you owe it to yourself to at least give this a try. Because the success rate for people who actually do this is off the charts. I have yet to have one person come to me and say, you know what, I really gave your way a try. I put in, hours and hours and hours worth of work, finding indicators, testing them, putting them together, using your money management strategies. And in the end, it just didn't give me the results that I got by using support and resistance lines. These words or anything like those words have never been spoken to me. And this is a great feeling. But it's so hard to talk people who are so entrenched into these dirty dozen camps into trading our way, because they have just been indoctrinated to do things their way for so long. So if you are interested and you'd like to come over to our side just to see what it's like, all right, here's what I'd like you to do. I have all the material you're really going to need as far as how to guide your way around this channel down below in the description. But start by, if you're in the Japanese candlestick crowd, take your favorite combination, take your favorite single candlestick, whatever it is that you like the best, and test it and be 100% honest. You're not going to want to be. You're going to want to prove me wrong. I get that. But take the backtesting video that I linked down below and do it that way and see what you come up with. What do you got to lose? And then once you've done that, go find some other things. I help you with this part too. And then take the same rules that you used for your hammers or your evening stars, whatever it is that you like, and run them through the same tests. And by doing this, that's the only way you're ever really going to know what you have. Are you using the best tools? Don't you want to use the best tools? You got to find out, right? And you might be, but you might not be. But this is how you find out. And the more often you do this, the larger sample size you will have, and the higher your chances go up to find something that really, truly does work amazingly. And then when you find a few of them, which you will if you do this long enough, you can put them together and make something even more amazing. This is my hope for all of you. So in conclusion, stop using Japanese candlesticks, please. If I haven't proven to you that they are not responsible for your trading being good or bad, really, they're just kind of nothing. They don't affect our market, and they look really good when they do win, that it makes our minds think they're something other than what they actually are. If I haven't convinced you by now, go do the testing and see if that convinces you one way or the other. Also, for most of my traders, you guys might have noticed that in the earlier videos that I did, I used bar charts. Now, I do that because I actually, in my own trading, use bar charts. I don't use candles. And I do that so I don't end up seeing a candlestick pattern that may, even as much as I'm against them, may influence my decision in any way possible. I know this is a weird thing to bring it up at the conclusion because we haven't talked about it yet, but the only reason I switched to candles is because people were complaining that it was hard to see, and so I want to make it more visible for them. But I use bars all the time, and I recommend that you guys do the same because I don't want you guys to have a really great long setup ready, but a hammer just formed, and now you're going to second guess it because you're still, from your early days of trading, so trained to think that way. Take that temptation away and just go to bars. That's another little tip I want to throw in there at the end. But if you love Japanese candlesticks and you love trading with them, that's fine. Just test them out instead of just saying these are automatically great because I'm so emotionally attached to the wins I got with them. No, put them through the ringer. Find out over time if they really do give you great results. And then when you do that, test other things so you know for sure. And then just use the one that's the best. Or even better, take your top 3 and combine them and see what that does. Japanese candlestick traders, there is a better road to take out there. I just don't think anybody's ever sat there and explained it to you because the whole Forex media world is way behind these things. It will never tell you different. So above anything, I just hope I was able to at least provide you with another option if you'd like to go that way. So if you're unfamiliar with this channel overall, this channel is full of videos like this, and it's the only channel out there that does things this way. So you need to subscribe and hit the bell if you haven't yet. Like I said, even if you're just a little bit intrigued and you're unsure if you really want to go this route or not, you still owe it to yourself to learn more about it. So that beginner's video I'm linking down below should help. But for my hardcores, my subs, my killers, the ones that have told me how wonderful their trading has become as a result of this channel, go do something about that. Test everything, backwards and forwards. Keep improving. There's improvements to be made all the time. And go use that system to take this market down and finally become that fraction of a percentage of traders who actually fulfill their dreams that they started with in the first place. Wouldn't that be great? Well, good. Go get it.